Welcome back to the Market Matrix, and today we are going to speak about support and resistance. While you're trading, you are going to see support and resistance. You're going to hear a lot of people say support and resistance. If you're watching the news, you might hear support and resistance, whether it's market news or even outside of the market news. You might hear things like, oh, people support this movement, or there is resistance from X amount of people, or whatever the case is. Support and resistance applies to things outside the market throughout life. I'm sure you hear the term a lot. But within the markets, you are going to need support and resistance. They're going to help you out a lot. It's going to help you, for example, find levels where the stock will hold and might stop over there and go the other way, where it might run up and then get rejected and go down from there. You heard me say support and resistance throughout all the other videos, the chart pattern videos where I'm speaking about the double bottom, cup and handle, all these things like the head and shoulders. And I kept mentioning support and resistance throughout these chart patterns because you are going to imply these and implement them in your strategies probably most of the time. And they'll give you a better idea of overall where the price is relative to how much room it has left to go up or down or wherever the case is. So I created this example to make it as simple as possible, and let's just get right into it and we'll learn as we go. So here we go. We have a house, and within the house we have Andy over here. And Andy, he's standing in the middle of the house. He's standing on the floor, so he's being held up by the floor. Andy has a ball. He takes this ball, and what does he do with it? He throws it on the floor. What happens to the ball is it bounces off the floor. Now, why does it bounce off the floor? Because, well, the floor is strong enough to hold Andy, to hold his fridge, to hold his nightstand, his TV, to hold all his things. So if the ball were to be thrown on the floor, it should bounce off. So this floor, what it's doing, it's acting as a form of support. It is preventing Andy and everything in his house in this bowl to fall below the floor. So this floor over here, this floor is support. It is supporting him from falling. It is supporting the ball from going in the basement, for example, or going to the street level, or whatever the case is. Floor is holding everything up. So in stocks, when a stock comes down and it bounces up, and it comes down, and it bounces up, and it comes down, and it bounces up, it's being held by support. So you could look at that support as if it's a floor. The floor is holding it up. Now, let's say Andy wakes up one day and he has this superhuman strength where he takes this ball, and this time he has superhuman strength, so he's really strong right now. He throws the ball, but what happens? It breaks right through the floor. So what changed is that initially he didn't have enough strength. He just had normal strength. So that's why the ball just bounced right off the floor. In this case, he's strong enough to throw the ball and it will break through the floor. Now, putting this in terms of stocks would be a stock comes down, it bounces off. It comes down, it bounces off. Buyers come in, buyers come in. Sellers come in, send it down. Buyers come in, send it up. The sellers come in strong enough with enough momentum to make the stock break through the floor. It breaks through the support. Again, I'll repeat it again. The stock comes down, buyers step in, sellers come in, but it's being held by the floor. Sellers come in, it's being held by the floor. Sellers come in over here again. It comes down to that support, but the sellers this time are strong enough to break the support. Meaning, if there is enough force, enough momentum, maybe enough aggressiveness, this support can break. For example, if you had a jackhammer and you just started hammering at this floor, it would eventually break. Same thing with the stock. If it has enough strength, if the sellers are strong enough, they can break through the support. Now, let's look at it this way. We're going to look, Andy has a ball again. This time, he doesn't throw it on the floor. He throws it on the ceiling this time. And what happens? It bounces right off the ceiling. Why? Because the ceiling over here is resisting the ball from going any higher. There's something here to prevent the ball from going higher. So what does it do? It bounces right off. Now, let's say again, Andy wakes up one day and he has this superhuman strength where he takes the ball and he's strong enough at this point to throw the ball at the ceiling where the ball breaks right through the ceiling. It breaks through. So this ceiling is no longer acting as resistance at this point over here. It was over here until Andy had enough strength to throw the ball, allowing it to break through this resistance, to break through the ceiling. So, same thing is implied with the stock market. Again, the buyers come in, they send the stock higher. Sellers come in, send it down. Buyers come in, send it higher. Sellers come in, send it down. At this point, the buyers come in, but they come in stronger. They come in more aggressive. They come in maybe with more orders, where they send it up, and the buyers are so strong where it breaks this resistance. It breaks the price ceiling, where this is no longer resistance at this point. At this point, we see it is broken. The resistance is broken. The ceiling broke, meaning the ball went through. Why did it go through? Because it had enough strength to go through. It had enough momentum to follow through and break the resistance. Same thing with the stocks. Sometimes the buyers will be strong enough to break through the resistance. Now, what happens sometimes is, let's say this ball broke above the ceiling. What happens now? If the ball comes down with the same momentum, the same strength, it could break right back below the ceiling. But what can happen as well is it broke above the ceiling and it can stay in the attic, for example. And the attic and the floor level, they share this over here, the ceiling. The ceiling for here, for Andy, would be the resistance. But the ceiling for the attic, the floor for the attic, since it's the same level, is going to be the support. So what happens with stocks sometimes, let's keep it at the ball. So what happens with the ball is the ball breaks through the ceiling, and let's say it bounces on the attic now, on the floor of the attic now. You can implement this into the stocks as well. A lot of times they have the same concept. A lot of times a stock would break through the resistance, and what would happen after that, after it breaks through this resistance, is it comes down, and sometimes it would hold this resistance as support now. It was resistance over here, resistance over here, resistance over here. It broke the resistance. Now it's holding resistance as support. So this previous resistance turns into support, support, support. Unless the sellers are strong enough to send it back down below this support, which will turn into resistance again if it fails to break back above. So I hope that helped you guys sort of better understand support and resistance, or at least simplified it for you in a way where you can see it, visualize it before we implement it on charts. So now let's look at a couple of chart examples and let's see what we can do. So over here we have Amazon. And Amazon has some support and resistance. Let's see if we can spot them. So let's just zoom in right over here. So we see over here, the stock rejected. Over here, the stock rejected. Over here, the stock rejected. So what is that considered? It is considered resistance. So we can draw a line right there. The price over here shows it's about $102.08. This is resistance for Amazon. Well, it was resistance for Amazon. Came up here, rejected. Came up here, rejected. Came up here, rejected. Came up here, had a bit of a fight, and it broke above it. It tried to stay above it, but it fell down back below it. Remember, what happened over here, why it fell back down, is because the buyers weren't strong enough to keep it up. The sellers, in fact, were strong enough to push it back down below this support. Until eventually what happened? Over here is where the buyers become strong, because they not only broke it above this resistance, but they sent it way higher. So let's look at other examples. Let's zoom out of this chart. Beautiful. We have even more support and resistance we could take a look at. Remember, I'm not going to take this line off. This resistance over here, just remember it. We're going to get back to it really soon. this resistance over here. So let's zoom in right over here. And let's take a look what's going on over here. Over here, we see it rejected over here, it rejected over here, it rejected over here, it broke above it once and twice over here. So what do? Again, you take a line and you drop it right there. So you know, the reason why we take a line and drop it right there is so you know that that resistance is there. Because a lot of times, maybe you'll only be zoomed in to this portion of the screen or whatever portion of the screen. So if you see a line over here, you would now know, okay, let me look back and see what type of resistance was it. Was it some strong resistance? Was it not that strong resistance? Let me see why that line is there. I like to keep the lines there so that way a lot of times past support or past resistance can be future support, future resistance. So we can see it rejected over here, rejected over here, rejected over here. This is resistance. It broke over here, but what happened? It fell right back below it. It broke over here, but again what happened? The seller stepped in and sent it back lower. Now, over here, what do we see? We see support. Stock came down, held, came down, held, came down, held. So many times, the sellers tried to push it below this support, but they couldn't. Let me zoom in over here, just so we can see. So many times. Once over here. Once over here. Once over here. A bunch of times over here, actually. 1, 2, 3, 4, 5 days it was just bouncing off, bouncing off, bouncing off. Another day over here where it just bounced right off. The buyer stepped in every single time it came to this price. And what is this price? We see it over here, $102.08. Wait, if we remember, where did this price come from? Remember this resistance over here? Where it was rejecting. Whoa. Where it was where it was rejecting. It broke it over here, and it came down to retest it long later over here, and it held it so many times. So at this point where all the sellers were selling at that level, now has all these buyers at that level until the sellers are strong enough and eventually send it back below this price. Now let's look at another example. Let's look at Square. So over here, what we can do is we can zoom in over here. And we can see, again, if you take this, you can see the level over here, where it has resistance. Once over here, again over here, again over here, again over here rejecting, again over here. Here it broke it, but what happened? The buyers weren't strong enough. The momentum of the buyers wasn't strong enough to keep it going, to keep it above this resistance. In fact, the sellers came in and pushed it lower. Now, a lot of times, what we'll get into later on is something called supply and demand zones, which relates to this a lot. Once you learn support and resistance, soon after that, you should learn supply and demand, which we'll get into as well. It's zones rather than levels. So what I usually do when I look for support and resistance is I find these levels, support and resistance. But what I also do is, as you can see over here, it's not an exact number because it went a little higher this time, a little higher this time. It's right under it this time, right above it this time. So what I would do is, let's see, instead of taking this and drawing a line sometimes, what I may do, since the zone is a little wider, it's not exactly at one price, is I will draw a rectangle instead. Maybe something like this. Maybe something like this. So I know this whole zone is a resistance zone. It's a resistance zone because if I only have it over here, what some people do is have it defined in their minds. They'll have it defined where, okay, they see this exact price, this is where it rejected. Oh, it broke above it over here. It broke above it. Let me buy. But meanwhile, okay, it broke above it, but there's a whole zone. This whole wick over here of the candle is the zone. This whole wick, let alone the body. So you would need to watch out for that as well. You don't need to rush the trade and think, oh my God, it broke my line. Let me just get in right away. No, you need to take a step back, look at the zone, look at the level. Is it just a level? Because if it's just one price where it's like, a dollar and let's say $1.04, then maybe it'll be easier. But in this case, if it's let's say this is $276 and the top of the zone is $279, there's a couple dollar range over there. So you need to watch out for things like that as well, and know that it's a range rather than just a resistance level, one price. Sometimes it's not going to be one price. It's going to be a range, maybe a couple dollars, maybe a couple cents. So let's take a look at another example. Let's look at Meta. Over here, what do we see over here? Let me zoom in right over here, actually. This candle is a massive green candle. This shows a lot of buying activity. A lot of buying activity. Runs up and then it just stops. Comes back down, goes back up, and it rejects over here basically at that same level. Right there, rejecting at the same level. What does that show us? That there is some form of resistance. Even though this move was really, really, really strong, the stock just stopped. It came to a stop. Literally got rejected twice at that same level. And if you remember from the other videos, the chart patterns we spoke about, if a stock rejects at the same level, what does that signify? This can be a double top, which it came down. This candle looks like it came back up. We had the neckline over here. So it looks like this candle came back up, retested somewhere along the neckline, and continued lower. So you would need to make sure you keep an eye out for things like that. Now let's look at AMD, for example. Let's see, AMD. Beautiful. Now, time after time, you would be able to open up a chart and just start to plot support and resistance. You would know, you would see the levels aligned up. You would see, okay, the stock starts to look like this, and then maybe it looks like this, and then maybe that, and then it comes down to that same level and holds. You could know that over here, we have some support. Just like this over here. So, let's zoom in a little bit, make it easier to see. Over here, we see the stock came to this price and held it so many times. So many times it held it. Let's make it a little lower just so we don't cover any candles. And let's zoom in. What do we see? Stock came up, came down, buyer stepped in over here. Buyer stepped in over here. Buyer stepped in over here. Came close to it, so buyer stepped in before it even got to the level. Buyer stepped in over here. So that's what support is. Every time it hits it, the buyers are stepping in at this price. The buyers are stepping in at this price. So buyers know that, okay, it held it here, it held it here. Some buyers might think, okay, what is this price? 73.52? Every time it comes down here, I see buyers buying. So if it's up here, it's at 92 bucks or whatever the case is. Why am I going to buy up here if every time it comes to 70 something bucks, the buyers step in? So let me just join them. Let me put a buy order at 73 bucks and 50 cents or wherever it is, 72 bucks, 73 bucks, wherever the stock is trading at, and let me just put a buy order over there. Some people do that. So they wait for the price to hit that, and then they would buy. Again, that's not always how it's going to be done, because sometimes maybe this thing will break above here, retest, and then keep going. In that case, maybe this should have been your buy over here or something like that. But just the basic knowledge of support and resistance is what I'm trying to get through right now. And we'll get into more things later on. But for now, let's look at another stock. Let's look at Boeing. Boeing had a crazy run. I mean, a crazy couple years. What we see over here is we see this whole thing over here. Boom, right there. That level right there. Now this can show you what happens sometimes when resistance is broken. I mean, support is broken. Let's take a look. We could slap the price somewhere over here. This is a beautiful example of sometimes you might not use a line. You might use a range. You might want to draw a rectangle because look, it wicked off of it over here, wicked off of it over here, came down below. I mean, this range is kind of big. This over here, some news may have happened. The company may have been going through something where there's been a lot of volatility and the price just couldn't hold up. It was just dropping until buyers just stepped in to buy it up. But we see there's a common range over here. Held over here, held over here, held over here, broke it here twice but came right back above it, held it over here, came close to it over here, held it over here, Slightly broke below it over here and came back up. But over here, we see that it broke it and it kept going. Now, what happens after that? This is the crazy part. Sometimes this is why you need to know support and resistance, because sometimes when support is broken, something like this can happen. Something like that. This is that same level we were just looking at up here. Now it looks really far. This is 318. This price over here is maybe 80 something bucks. Support broke. It came back. Now this level over here, it came back, retested this support. Retested this support over here. So we had that support over there. Now what we can do is take this line. We can see that buyer stepped in twice over here. That is also support. So if buyer stepped in over here, this time it ripped right through both of these levels. Ripped right through them. What happened after it ripped through them? Let's zoom in a little bit so we can have a closer look. Ripped right through it, ripped right through it. Didn't stop, didn't stop, didn't stop. It stopped, came back, retested that second support as resistance this time, got rejected, and what did it do? It kept going lower and lower and lower and lower and lower and didn't stop till it reached way down here. So that's something good to know. Support and resistance. It's always good to know because that's going to be one of the first things that catches your eye, maybe. Seeing that there's support over here, seeing that there's resistance over here, seeing that you could know, okay, maybe over here the stock is going to come down, it's going to hold. Maybe if this fails up over here while it's running up, if it fails, maybe it comes down over here to this level over here where you can see it rejected over here, but over here it held, and over here it held. Again, this pattern is a double bottom pattern. We spoke about this. Bottom, there's another bottom. Boom, the neckline is over here. So maybe if this thing comes down, maybe it comes down to 180, holds somewhere over there, and then continues higher. And this is the measured move. We don't know exactly. But it's good to know support and resistance because, again, a lot of times you are going to use these. Even whether you're looking at a daily chart, whether you're looking at a yearly chart, whether you're looking at a 5-minute chart, an intraday chart, whatever chart you're looking at and you're trading, or even if you're investing you want to buy long term, it would give you a good idea outside of fundamental analysis, of course. Fundamentals analysis is a whole nother topic where you would actually know if a company is fairly priced, if the price is valued properly or not. But for now, as of technical analysis, support and resistance will tell you where this thing might go, where it might get rejected, where it might hold, so on and so forth. So that's all for now. Thank you for watching, and I hope you learned a lot about what support and resistance is, and I hope you remember this analogy because this is, the simplest way I can possibly put it, where it just makes sense. So thank you again, and stay tuned for the following videos that we will put out.